right. Good morning. It is Monday, June 23rd, 2025. An eventful weekend, obviously, but first and foremost, we hope that you had a nice time with friends and family over the weekend. I made the mistake, and I never check like news headlines before I go to bed. It's not a good thing to do. And sure enough, Saturday night, I'm climbing in bed, and I just have, let's just see what's going on. And of course, you see the headlines: the U.S. bombing, the Iranian nuclear facilities. I was like, oh dear. And then, of course, I go down the rabbit hole trying to learn more about what's going on and what that means. Didn't sleep as long as I should have on Saturday. But as we discussed in last week's video, just many times these as scary as they are, these geopolitical events rarely have a lasting impact on markets. So you look at futures this morning here, this Monday morning, roughly flat. Equity markets roughly flat. Bond markets, largely unchanged based on what certainly seems like a pretty big geopolitical headline. Just in kind of reading through some of the bigger economic risks. If Iran is able to successfully close the Strait of Hormuz, that could potentially have economic consequences. From what I read, it looks like 1/5 of the global oil trade goes through that strait. So shutting off some of that supplies, you could pose the risk of increasing oil prices, which is a higher input cost for everyone, which could slow economic growth. So we'll see the way that all shakes out. Also, kind of newsworthy from last week, we received the Senate's version of the new tax bill. Okay, so about a month ago, we received the House version. We said, hey, it's not really worth digging in too deep because this is going to go back and forth between the Senate. So the Senate comes up with their version of the bill. The biggest difference from the House version, the Senate reducing that state and local income tax deduction. So the House had $40,000 of deduction. The Senate brings that down to $10,000. Okay, largely, again, that's just concerns about the national debt and so forth. So Senate said, no, we don't want that many deductions. So again, it's still not worth digging into until we have the final version of the bill. And at that point, of course, our office, we're going to look into it in great detail, and we'll likely host some type of webinar once we know the final rules of the bill. So lastly, last week, a Fed meeting. As expected, no change in interest rates. Still projecting 2 rate cuts between now and the end of the year. Again, as is always the case with the Fed, many times they are late. So sometimes for better, sometimes for worse. But so we'll see the way that plays out. And I guess lastly, a lot of economic data on tap here in the week ahead. So we have housing, durable goods, PCE, which is the Fed's preferred inflation metric, as well as the University of Michigan consumer confidence. So lots of economic data to kind of dig through here in the days ahead. So questions, comments, concerns, please don't hesitate to reach out to our team. Certainly stay cool. If you're in Charleston here, it's that time of year. It is warm. So we hope you have a great week, and we'll talk to you soon. Thanks.